Good morning, everybody. Welcome to the Flow Show. Here we are, Thursday, the 16th of August, nearly through yet another week. And what's been going on during that week? Morning, Kay. How's it going?
Morning, mate. Yeah, all good, all good. Yeah, the week advances relatively fast.
I can't actually wait to get to the weekend, personally, but there we go. Right, let's get cracking straight into it. Start with a bit of data over in Japan. We had core machinery orders for August coming in down 0.9% on the month. A little bit of a wobble there. As you can see, it was a bit of a negative month last month and was expected to recover a bit, but it hasn't done so. So it's not particularly good. We did have one of the BOJ's hawks out who voted for a hike at the last meeting, Tamura, but says we need to avoid the risk of rapid rate hikes. There are growing upside risks for prices, should move rates closer to neutral amid the price risks. It says the central bank is now in a phase of deciding rate hikes. Still some distance to reach the neutral rate level, but there's no need to raise rates to a restrictive level. Unfortunately, can't say anything definitive on the October vote. But can't deny the possibility of achieving their inflation target in the latter half of 2025. That's the fiscal year 2025. So, as I said, one of the hawks there. Do you think he's going to vote for another hike, Kay, or is all this uncertainty going to put him back in his box?
According to what he says, he could he could stay in his box for a month or so. I don't know. I mean, with all the politics, etc., etc., are they not all going to remain on hold right now? This month at least. Yeah.
Mark.
He could dissent again, but he may be the only one. Last time there were two. There's his mate as well. But maybe he could still dissent a bit. But yeah, I mean, will it change a lot? I don't think so.
No, but you think if nothing really much has changed between the last meeting and this one in terms of the
Yeah,
economy, so if it warranted a hike last month, it should warrant a hike this month. But
yeah.
yeah,
Unless they hide behind that negative real wages again.
yeah, could well do, could well do. Right, moving on to the political guff going on still, and there's been a little bit of movement, shall we say? So yesterday we had some comments from the Ishin chief Yoshimura saying if we can agree on policy, Ishin will vote for Takeachi. And then the co-leader Fujita said we haven't chosen the LDP. This was just Takeachi's request. And then Yoshimura said that we understand we could get a cabinet post if we join the coalition. So some idea what carrot's being dangled for them. Then coming overnight into this morning, Fujita said that the decision on a coalition with the LDP is to be made soon, but says we cannot say whether we are headed to a coalition. So it's back and forth, back and forth. They said we found a lot of common ground with the LDP today, and Takeachi has pushed for further discussions over the next couple of days. All those talks have put the DPP's leader Tamaki put his nose out of joint. He says he's disappointed over a two-faced agreement between the LDP and Ishin. Speaking on his own YouTube channel there. Apparently, the other parties, CDP and Komeito, are going to agree to meet tomorrow. So they're going to be having their own discussions. Finally, some news on what Komeito is going to be up to. They've been a bit quiet of late. So all the horse trading is still continuing. If Ishin joins up with the LDP, that would put Takeachi very much closer to becoming PM. Maybe we can finally get this settled. But it's not there yet, and things can change. What's your view, Kay?
Yeah, a coalition between LDP and Ishin is only 2 votes short of the majority, and that's likely possible to get majorities because there's as much as 35 independents also. I think it would have been easier with the DPP to get the independents on board. But yeah, even Ishin could find a few, I guess, to rally behind their cause. The funny thing is, again, I mean, are we not back at just square one, where the opposition couldn't get or can't get behind one person to challenge the LDP, even a weakened LDP now, and a majorly weakened because Komeito also left the boat. So, but again, it's the problem. The problem lies more with the opposition. It was, as you said yesterday, a bit of a conspiracy to get Takaichi out, and then. We're 24 hours later, and all of a sudden, Ishin goes, "Oh, maybe we'll go along anyway." And leaving the other ones at the bus stop. So
Yeah.
yeah, and it's again the same thing.
Yeah, yeah, a complete mess. But we shall see. Who knows? It can still all fall apart. But it's worth noting that we still get comments out of Japan late in our day. So it's 20 to 7 in the evening over there. But it doesn't mean they don't stop talking, or we don't stop getting comments from them. So
Yeah.
be aware of comments later on.
And Ishin did bring forward a 12 points discussion list, and so far they only agreed upon one or two. So it's still not a completely done thing there either, right? So there's still a lot of moving parts, including going into the weekend as well. If people have positions in yen, there could be a surprise coming out of the weekend as well. We never know.
Yeah, very much. I think there's definitely some weekend risk for that. Right, over the water to the RBA, and we had Bullock out and about saying that consumption is slightly stronger than previously expected. Headline inflation is a little bit volatile. Says a job is not done on policy objectives, but the RBA sees the economy close to balance on the output gap. She also said, and this is a bit of a should have kept her mouth shut. She said 4.2% unemployment at the moment is good. And then a few hours later, we got Australian employment data, which showed the unemployment rate jumping to 4.5%. And so that was a bit of a kick in the teeth for that. That got the market on the hop. The unemployment change, it was still just under 15,000 jobs gained. A bit of a miss to expectations, but still turning around the loss from last month. Full-time employment gained 8.7k there. So part-time work making up the balance of that. However, some of that unemployment rate, maybe a good chunk of that unemployment rate, can be down to the participation rate, which jumped 2 points. It was 2 points, but the prior got revised up as well. So that can, as I say, can explain some of that. The market has jumped all over that bandwagon, or did jump all over that bandwagon, meaning that, the RBA must be closer to cutting at their next meeting, which I think is the beginning of November. I don't know. I don't think they're going to be shaken by one jobs report, considering they were on hold and pretty strongly on hold as well. But you never know with these guys. But we've seen a lot of those moves reversed already. Coming over to the UK, Rachel Reeves, speaking exclusively to The Guardian, said there's going to be higher taxes on the wealthy, which will be part of the story for the November budget. That's got a few people wondering what's classed as wealthy, because their definition of working people is certainly a definition that is open to interpretation. So we're going to see what she means by wealthy. So potentially not good news for a certain sector. We've been worried about, or people have been worried about wealth taxes and all that sort of thing. So it's going to be a case of seeing how hard she goes on that. She's blaming all this on all the angst in the world that's going on, all the hostilities and everything, and the volatility around the world. Don't ask me how it's all impacting us, but that's her excuse for why she's going to have to raise taxes. Following that, we got GDP data out of the UK, monthly numbers for August coming in at 0.1%. So a positive number. What it wasn't good news was that last month's flat reading got revised down to minus 0.1%. Year-on-year growth coming in as expected at 1.3%. We had industrial production and manufacturing production as well, which came out a bit more positive. But this one's, again, a number that's been a bit up and down, up and down. So still positive on the month, but still negative year on year. As you can see from that GDP three-month change, which you can use as a sort of rolling quarterly number, we're running at 0.3%, hardly worth getting a jelly and ice cream out for. Also some trade balance data there as well, which saw a little bit of an improvement in the deficit for that one. ECB's Dolence says there's no reason to change rates in the coming months. He's the stand-in Slovenian central banker at the moment. ECB's Nagel says it's premature to give indications about the next rate move. Says sticky services inflation means there's no complacency, and current information doesn't offer arguments for any rate moves. ECB's co-chair says it's important to keep the ECB's powder dry for a potential crisis, so not inclined to go for any more rate moves. A survey by Handelsblatt of some 169 companies shows that they are losing faith in the future. Some 94% fearing that things aren't going to get any better, which isn't good news. We're all waiting for this defence and infrastructure spending to kick in, but things are souring in sentiment over there.
Ryan,
yeah, mate.
Just to interrupt you, French Premier Le Cornu survives the no confidence motion. They have voted already, which is exceptional for France to vote before lunchtime.
Yeah, is it not lunchtime over there? What's time? Yeah, it's close to lunchtime. Pubs will be open. Let's have a look.
There's 271 lawmakers who voted against the government, but they needed 289 or 290 to pass. So the abstention of the socialist has saved his skin for now.
Yeah, which was to be expected. They said they were going to do that. So still maybe a bit too close for comfort, but he's over that. Let's see if they can move on. Not much happening in the euro on that. As we said, it was pretty much baked in. Right, so as we were doing, let's move on to some of the data. Not a lot out yesterday, but we did get Empire Manufacturing, which showed an improvement. Was expected to be less crappy, but it actually turned positive. Came in at 10.7. Employment rose. That was also a negative minus 1.2 last month, came in up 6.2. Prices paid jumped as well to 52.4 from 46.1. Prices received was also up a bit, 27.2 versus 21.6 previously. New orders went from a minus 19.6 to a positive 3.7. Again, this data has been all over the shop over the last couple of years. So we'll see whether it's the start of anything. When we get the Philly Fed, I think today we get the Philly Fed. So that's another little regional one to get. And then we kick off the PMIs shortly after that. The Chicago Fed has been spinning its own wheel on the data. It says US retail sales, excluding autos, likely increased in September. They say that they likely increased by 0.5%. They pick up on what I was noting last week with the consumer borrowing, saying that high-income households are driving the sales growth, even amid economic uncertainty, and middle and lower-income consumers are facing a financial strain and are seeking discounts. So it's still a bit of a mixed picture over there. The beige book, which everyone was waiting for now, didn't give us too much. If anything, it told us that nothing untoward is happening. Apparently, wages grew across all the reported districts. They said that economic activity was little changed on balance since the last report. There were 3 districts reporting slight to modest growth in activity, 5 reporting no change, and 4 noting a slight softening. They also noted that several of them reported that higher and lower middle income households continued to seek discounts and promotions in the face of rising prices and elevated economic uncertainty. So, yes, we've definitely got a bit of a 2-speed economy going on at the moment. Fed's Miran was out saying there's now more downside risk than a week ago, all of a sudden getting more bearish. With a change in balance of risk, it's more urgent to get to a more neutral policy. But he still says that 2 more rate cuts this year sounds realistic, so he's not that urgent. It says data is backward looking and policy should be based on where the Fed sees prices a year from now. That didn't work out so well in 2021, 2022, did it? When they didn't see inflation coming, and that kicked them up the arse. Says the US is due for a significant disinflation from housing. And talking about rates, doesn't see moves bigger than 50 basis point cuts as necessary. Treasury Secretary Besant was speaking. He said, he spent all afternoon speaking yesterday. He said, as federal employment comes down, the private sector will pick up those people. A bit of wishful thinking. It says perhaps China Vice Commerce Minister went rogue at their last meeting. The Chinese official said that China will cause global chaos if port shipping fees went through, which they did. US Secretary of War Hesketh says if war in Ukraine does not end, US and allies will take steps, necessary steps to impose costs on Russia for its continued aggression. A lot of talk still going on about using frozen Russian assets as well as other sanctions and whatnot. Trump himself said that India's Modi has told him he will not buy Russian oil. Trump also hopes that China will stop buying Russian oil. I don't know if Modi managed to say that to Trump with a straight face. I'm calling absolute bollocks on that stance. US Trade Representative Greer says the scope and scale of China's new rare earth restrictions is much bigger than the earlier magnet restrictions, and it took months to restore those flows from China. German Finance Minister Klingbeil, never know how to say his name, says we need to ensure China's response doesn't harm ourselves. We need a joint stance on China rare earths. So Europe not exactly going as aggressively on China as the US are. China's Ministry of Commerce piped up as well, speaking about earlier US-China talks this week because they have working group talks. Said China is taking a constructive stance and made suggestions for cooperation. Says the US has a negative attitude and the US persists in acting to restrict China. So they were forced to take countermeasures against the US. Okay, they've got half a point really, because going in with these port fees just seems a bit, why bother if it's created all this anger and palaver now?
Yeah, absolutely. I mean, first have to see what's really gonna come out of everything. If discussions they can have, at least that's the one thing.
Yeah, it seems like a poor risk reward trade, that one, but we shall see. Mexico President Sheinbaum says US trade talks are very advanced and expects more trade advantages for Mexico. OMB's Vault says we're definitely talking thousands of people for government layoffs, but then says it could be more than 10K. I think hearing that number, more than 10K, we're not talking hundreds of thousands here. So that might ease the market's mind on what might be coming from those layoffs. Obviously, 10K is a Bad news if you're one if you're a person in amongst that. But as I say, we're not talking hundreds of thousands of people getting fired off, so that will limit any impact that we see in the jobs data whenever we get that. But even so, a judge in San Francisco has blocked Trump from firing those workers during the shutdown, saying that because they don't have access to their government emails or any of their stuff, how are they going to be informed that they're going to be let go? So I don't know how that's going, but Trump's faced a little bit of a blockage on that decision to sack those people. And that's it for the headlines. That should have you all covered nicely, unless Mr. K has anything else.
Just one line in regards to those layoffs, etc. In that Besson came up with yesterday, which was a bit of one to frame in. He says that all the investment in AI and etc. will compensate for the layoffs in that the government may do, and that the private sector would suck up all the layoffs, which is bit wishful thinking, I guess. If you boost tech investments, it's not to replace it later on with humans, right?
Yeah, exactly. Very much wishful thinking for that. So yeah, we'll see how that all unfolds. Right, let's have a look at what's going on. Let's have a quick look to see what we're not getting today again. So there's the Philly Fed. So we're definitely getting that. We get a load of Fed's heads speaking as well. We won't get business inventories, but we will. Do we get business inventories? Let's see who does that. It might be a Fed number. I don't know. Oh no, Census Bureau. No, we're not getting that because some of these numbers the Fed put together as well. But even those can be delayed if they use government sources. We will get the NAHB housing market index. But you can also forget retail inventories and that sort of stuff. So it's just the last few Fed heads before they enter their blackout period, thankfully. And then we'll have some peace and quiet for a bit. Right, let's look at what's going on. I don't want to look at dollar yen. I set an overnight TP, partial TP for my shorts at 150.50 last night, and we got down to 150.51, and now we've come all the way back up again. So bit of a little. Maybe I should have just looked at my chart and stuck it above that number there.
Never put it at a round number.
Yeah, I just thought I just picked it. I wasn't even. I was going to set it at 80 because that's the level 85. I thought no, in case there's some big news overnight. It has been a bit volatile in the evenings through Asia, so I thought, yeah, let's stick it at 50. Yeah, well.
Yeah, I know, mate. I mean, I was half joking, and I'm of course not happy you haven't got yours, but that was what we were saying for years before. I mean, never put your take profits at round numbers. Yeah, I mean that's just bad luck, mate. I mean, looking at the volatility in yen, what's up, people?
Yeah, exactly. No, shit happens. That's you make the decision. You live by the outcome. I'm not that bothered. We're still looking like we want to be heading lower a bit. So I'm not going to be complaining. I'm in got a bit of margin there, but yeah, I'll you know what I'll do? I'll put it at 55 tonight, and it will trade down to 150, and then I'll miss out.
Well, I mean, you will still be short.
Yeah.
You will still be short. I mean, that's only half. I mean, if you give 5 pips back in dollar yen, it's all right. Huh?
Yeah, I'm not gonna fuss. But sometimes you get into a position where the market just doesn't want to play ball with you. I'm hoping I'm not heading into one of those. I mean, I mucked up S&P yesterday. I shook myself out of a trade. I got short at right in there, 67, and I was going to add at 20 with a stop at 30, and it got and then I shook myself out on this break at 26. I got out 3 pips off the high, and then 10 minits later that happened.
Because you're in front of the desk. Because you're in front of the screen. That's human. I mean, for everybody listening, that is human. But if and that's and it's not because it's right, because everybody does it. If sitting in front of the screen can make can make you doubt your own plan, and sometimes it's just human nature messing up things, and that's what happened to you yesterday, because your initial plan was bang on,
Yeah, it
and
absolutely
and
was.
it's very unfortunate. That's another thing, and we actually, when we do coaching, we actually teach it to people. I mean, unless your plan changed, don't change before it actually changes. So, well, yeah, I mean, that's just shit that happens when we're sitting in front of the screen. Happens to me as well, you know. I mean, it's not only for novices; it's for us, valid for us too.
Yeah, absolutely, absolutely. Because no one knew that was going to happen. You can only trade what it's doing
Yeah.
at the time, and that's exactly what I did. I thought, oh, we're breaking here. I was going to add at 20. I didn't bother because it was looking strong. We broke 20s. I thought, no, I'm just going to get out. I'll save myself 4 pips on my stop, and it was a costly move. But again, those are the decisions you make at the time, and you live by them. I'm not gonna beat myself up about it. It's a missed trade. Fine, I'll work to the next trade. But as Kay says, we all do these sort of things now and again. Sometimes you're rock solid with your plan. Sometimes you think, "Oh no, I don't like it," and you jump ship. So that's what happens. While we're on the S&P, might as well have a look at that. The way this is recovered though, and looking strong again, Kay. It's not for dying just yet, is it?
No, mate. I mean, sometimes you have to wonder, right? And again, and I think somewhere your position was justified as well, because the longer this shutdown is going to linger, the higher the risk that we are seeing a setback. But then you get all those results from those banks, etc., and they're all beating expectations, making money by the boatload, and yeah, it makes you doubt about those things. But I still think that, okay, the global picture is still one where when you see setbacks, they're getting really hoovered up. I think there's maybe some more passive funds going on and saying like, well, we need to show returns, and we're just going to. They're just sticking in bids to hoover up all those bigger setbacks. But yeah, I don't have a position. But the one thing is for sure, that I'm not going to chase it here for as long as this shutdown goes on in the States, because there could be some more of those yeah, setbacks coming in the equity markets. But maybe we need to wait a bit before we get over the hump of all those results, or the major results at least, and then get back into more shutdown watching.
Yeah, absolutely. I think it was Tuesday when on Face when was speaking about this, and I said, because we were trading down here or
Mm,
wherever it was down here, and Dale was saying, is it going to collapse down? I said, certainly if you get up to, if it holds around 67, 67.20, that's going to
mm,
potentially change the picture. And I still think that might be the case. If we can't get above this area again,
mm.
you can forget about highs, and then maybe we are going to see a little bit of a downtrend developing. But you never know with stocks. We could close the day at 6,800, and then everyone's in the wrong once again, except for the buyers. So who knows? Who knows what happens? Right, mate. I'm going to ping it over to you because I've not been looking at a lot this morning.
Yeah. Um, let's do just not too many. But the euro dollar was kind of interesting when we broke through that 50-55 as a confirmation above 30. But now we know the result of that French vote. Let's see if we can just hold it around that level. We had a little bit of a retest this morning. This is all short-term stuff, but it would be interesting if we just hold here and then continue to move higher. Still a little bit long, but I've really tightened my stop now. I bought it around here and then sold a few more on this French vote result, and my stop is now just below this 30 line, because taking it in the context of this vote, assuming that the euro has been supported in a way by the better prospect, contrary to what happened here, by the better prospect of Lecornu getting through, at least surviving this no confidence motion. Um, it should really perhaps have been pushed through or late, but we still have to know that this is a no confidence motion. This is not voting voting the budget through yet. So there's still uncertainty perhaps coming. Okay, but for the time being, he at least survived this no confidence motion. So we will see what happens around 116, anywhere between 45 and 30, I think, on the intraday, only intraday, bigger picture, we're still in that, mooching around in that range, and there's a potential impact from shutdown if they don't get an agreement, which could just have it drift perhaps a bit higher. But we'll see what happens on the day. Because if it gets back below 116.30, knowing that Le Cornu survived this vote, maybe the short termers are not going to feel too brave about it again. I see what you did on the Aussie. Um, it's nice trading, by the way. It is really this 2025, right? Yeah, we had a little peak above it on Monday or so, but it's really 65 2025 that is going to play a role here. Interesting though, and I would not dismiss everything that's happened here, although we have been trading through. But look again here. Okay, we had then this big spike recovery, and on the mixed or weaker jobs report in Australia, we have again held around 64.80. So that makes this little 40-45 pip area a bit of an initial range that we could look at, whether we can break back above or whether we go and have a look back at those lows that we saw earlier in the week, or even back in August, actually, those lows. So that's going to be an interesting one. If we break above, I think we could do this 25.30, but especially here, around 65 three quarters is going to be a big zone as well. Bit of a decision time if ever we would get there, despite that smaller, weaker number. Okay. On the other hand, we know about Aussie dollar getting back onto a bit of the risk boat and the China boat. So it may actually be that it just held around here and that we are going for a little retest of 2025. But we are talking about relatively small moves here in a lot of currencies, right? The one that has surprised, I guess, people was the sterling to a certain extent. And over the past couple of sessions, we've seen gilts outperform the euro bonds, and it has put a bit under the sterling that gilts outperform. The funny thing is, when gilts outperform, one could say yes, but yields are coming off. Well, we know from the nervosity in the market that if that sterling does the worst if when gilts come off, because it's actually like a vote of confidence, if you want. I mean, if gilts go up, that means that there's less stress in the UK asset market, and that actually underpins the sterling nowadays. Okay, it is different when you look at pure economic data driving the Bank of England rate decision, or risk of recession, or outperformance on growth and GDP, which we didn't have. Now this is the gilt move, our kind of vote of confidence in what Rachel Reeves may come up with. And let's not forget, there's still a bit of time before that's going to hit. But anyway, sterling really outperformed and broke above 33.60.70, then 33.90 as well. Was a bit of a trend line here, and I guess the market was running a bit short, or is running a bit short perhaps, in sterling, and needed to buy back. And we see it again in euro sterling as well. Again, 87 2025. Yeah, it's a solid ceiling right now, and the day it breaks, it's probably gonna go. But before it breaks, don't try to really push it. But we are coming into an interesting support zone here, which is intra range. It's still we tagged that 61.8 here the other day on the 8th of October. Then we ended a bit higher. Now we end perhaps and a little higher as well. But this zone, I wouldn't dismiss this zone. Yeah, anywhere 55, 65 is going to be relatively important intra bigger range for the euro sterling. Okay, if we would get below there, a quick move lower would not be excluded. But again, can it? I've got a bit of a I've got a bit to add a bit to my position around this level here. I've got 65 and 60 in there in bits and pieces to see if this zone holds. But if it breaks below 50, I'm probably gonna be out for this move. But yeah, I still think that it's a retracement and we may see it higher. But of course, we need, as I said a couple of minutes ago, we need to keep an eye on those guilds. Okay. You did look at dollar yen, did you, Ryan?
Yeah, well, quickly, yeah, you can have a.
Yeah, but I mean, there's another one bit interesting here, and I know Ryan often looks at it. For as long as dollar cat remains above, and I've been a while since I really looked at it, but it's an interesting zone here. 114, 15, 20, low here, high here, a little bit above, then coming back, a little bit above, then coming back. They're now over the latest sessions trying to get back down there. 114, 15, 20. For as long as we are above 114, 15, 20, the bullish bias remains, right? Only below 114, 15, 20 could we see a bit of a bigger setback, perhaps around this 139.65 or even 139.25, 45 here. But for as long as we're above 140, 15, 20, it looks to me like that bullish bias can remain okay. Contrary again to what's happening in the mix, this thing is I'm starting to wonder if I haven't missed the train here on that last test that we saw. Because if we start to get back below 1840, 1841, we may push another 500 or 1,000 pips lower, you know. It does look a little bit like it right here. I'm going to stop it here, guys. I have a couple of, well, just one other position running, and that's in dollar Norway, where I'm trying to build a little bit for as long as we are below this zone, build a little bit on a short position. I know oils are moving lower, but I'm looking at this as perhaps a bit of a spike. Compare it a bit to that dollar mix. It has a bit the same look. And if we start to get below 1005, 1006 again, I think we could accelerate to the downside. Ryan, back over to you, mate.
Thank you very much, mate. Yeah, we're going to have a bit of an early one today. I've got to hop off to play nursemaid to my kids who are off school. With a bit of flu, so I'm off to do that. So thank you everyone for coming to the Flow Show. Hope you have a great day. Do join everyone later on the Face Show. Otherwise, we'll see you tomorrow. Have a good one.